68.74. Oliver Slopes with Blue Line Futures. And Oliver, as we start with the corn market, what, 50-day moving average? Is that where we are?
There are a cluster of moving averages that we're retreating to in the corn market, the 50-day, as you'd mentioned, and the 100-day. So a big kind of line in the sand for a lot of traders to keep an eye on, whether you're bullish or bearish. The 100-day, that comes in at 478.25. We haven't closed below that since April 7th. I still think that the bulls have a slight upper hand here as far as the technical landscape goes. And so long as we can defend those moving averages, the break and close below that, and you could start to see some technical pressure come in, especially with it being the end of the month. You could see some profit taking after what was a very, very good start to the month. Some of the reason for weakness, too, on the fundamental side, improving weather conditions in Brazil and in South Africa, and good harvest pace in Argentina. Those are a couple things to keep a very close eye on. And talking about crop progress and planting progress, we're going to get an update from that later this afternoon from the USDA, and then in the next week or two, I'd imagine we start getting good to excellent conditions for corn, and then a couple weeks after that for soybeans. So very interesting time of year for the grain markets, as you're well aware. So should be very exciting going forward.
Yeah, looking at that November 2025, so the new crop soybean contract, and we've had some peaks and valleys over the past 6 months.
We have had some peaks and valleys. I still think that the new crop November contract does have some more risk to the upside. Soybeans consolidating here over the last couple of trading sessions. A big move higher on Thursday, set back a little bit on Friday, and then a little bit of minor weakness today. But all in all, I think the charts remain constructive, and I think the fundamental landscape remains relatively constructive as well. So if we can get out above last week's high, I think that probably spurs some additional momentum. We could see some funds step back into this market.
All right, Oliver, fireworks in the livestock markets, especially in the cattle market at the end of the week. So hang on, we'll come back and talk about that. Market Day Report continues in a moment. We've got higher cash prices. Oliver Slopes with Blue Line Futures. Let's start with the cattle. Fireworks on the cash side.
A lot going on in the cattle markets here to start this week. Obviously, as you'd mentioned, a stronger cash trade, looking at 212 to 213 in the south, and we've got that April contract tracking right along with that, which expires this week. I think we touched last week briefly on. I really would have liked to see June live cattle converge a little bit more with the higher cash trade, and the fact that we're not really getting a huge breakout move is a little bit of a caution flag, though we still are, trending higher and marking new contract highs this morning. I would have thought that it would be a little bit more oomph behind it. And then on the feeder cattle side, we're seeing a nice move higher this morning as well, with screwworm kind of making a reemergence into the headlines. Secretary Rollins over the weekend sent a letter to Mexico's president talking about the need to address that issue more seriously. This morning, Mexico's president responded that they are working against the screwworm problem. So we are starting to see that back in the headlines. I wouldn't be surprised to see that push and pull some funds and price action through the rest of this week's trade.
All right, I'm going to move us now over to the energy markets, and in part because last week Treasury Secretary Scott Bessent calling on the World Bank and the IMF to get back to what they're supposed to be doing, and saying we need more energy around the globe. If we get more energy, we'll start pulling people out of poverty and we'll reset trade. As we look at the crude oil market, what are thoughts there?
The crude oil market, we've seen a little bit of pressure here in the early morning trade. All in all, I really feel like we're kind of in a little bit of an equilibrium in the crude oil market. I think you could probably make a range between 60 and 70, and hopefully we can stay within that, which I think would ultimately be good for producers and users. It's enough where producers can make money, and cheap enough where the consumers aren't really getting pinched. So I think that the equilibrium there probably remains intact. Obviously, we're approaching summer driving season, which is seasonally strong for demand. So potentially you see a little bit of uptick in that price action. But ultimately, I think things remain relatively contained in the near future.
Yeah, and we end with diesel prices in mixed territory and nat gas with a bit of a rally to start the week. Oliver, great to see you. Oliver Slope is with Blue Line Futures in Chicago.